Hi everyone. In this lecture video, we will be going to talk about the break-even point in consideration of the sales with profit. In our previous lecture video, we have only talked about the formula for the contribution margin. Now, we will go in to introduce what will be the effect of the profit before tax and the profit after tax. Keep in mind that if we are working out with the tax rate, again, it depends on your jurisdiction. If the problem will going to state a specific tax rate, then please use that tax rate. If there will be a silent assumption in this one, like for me, I'm in the Philippines, then we will be using the corporate tax as of this date of 25%. Now let's have this illustrative example. ABC Company provided the following information. We have the unit sales price, the unit variable rate, the total fixed cost, and the tax rate of 40%. We have different cases from A to G. Now we will going to have this template for us to plot the given for different cases. Let's now have case A. For case A, the profit before tax is 40,000 pesos. In the previous lecture video, we have an understanding that the contribution margin at a break-even point should be able to absorb all the fixed expense. So we can break back with the contribution margin, and that will be 80,000 plus 40,000, amounting to 120,000 pesos. Now, since the 120,000 pesos is only a 40% of the sales, so 120,000 pesos divided by 40%, our total sales is 300,000. Now that we can compute for the total sales, we can now derive the total variable cost, and that is 180,000 pesos. The tax rate is 40%. 40,000 multiplied by 40%. Therefore, our after-tax profit is 24,000 pesos. Using this template, we can now compute for the break-even point in terms of pesos and in terms of units. We have here 80,000 plus 40,000. Remember that the 40,000 here is the before tax profit. 80,000 plus 40,000, we have 120,000 divided by 160 pesos. This is our unit contribution margin. To compute for the break-even point in terms of amount, 80,000 plus 40,000 divided by 40%, we will now have 300,000 pesos. Let's compute for requirement B. The profit after tax is 48,000. Let's plot it here, 48,000. Then 48,000, our understanding here is just, this is only the 60% of the profit before tax. 48,000 divided by 60%, we can now get 80,000 before tax profit. Third tax profit is 48. Therefore, our tax here is 32,000. Next, our contribution margin rate is 40%. Then 80,000 plus 80,000, 160,000. 160,000 is only just the 40% of the total sales. Then for us to get the 400,000, let's divide 160,000 by 40%. Then our total variable cost is 240,000 pesos. That's why if we're computing for the case B in terms of break-even points in units, 80,000 plus 80,000, that will be 160,000 pesos divided by 160 pesos, that is our unit contribution margin. Formula for case B, 80,000 plus 80,000 divided by 40%, we can now get 400,000 pesos. So how should we interpret this one? A slight difference in terms of before tax and after tax will have a big implication in this one. For example, in case A, you only need to sell 750 units for you to break even. But if your goal is after tax profit, then you should be able to have 250 more units to sell for you to have a break even or for you to reach the break even point level. Let's compute for requirement C. Profit before tax is 20% of the sales. So let's write it here. The profit before tax is 20% of sales. Now let's pause for a moment because we can now see two 100% here. The first one is will be based from the sales and the second one is based from the profit. If we are going to compute for the cost volume profit, we should be mindful of this one because you cannot just get the 20% if it will be coming from a different basis. Now, let's try to make it uniform. Okay? Since we are getting the 20% of the sales, since the profit before tax and the sales is a different basis, therefore we should be able to translate it for them to have a uniform basis. So how should we do that? We have here the 20% of sales and the 20% of sales in terms of units that will be 400,000. The 20% of sales in terms of unit, that will be 400 multiplied by 20%, that is 80 pesos. Now, we should be able to deduct the 80 pesos in terms of units and the percentage of the profit before tax. And the percentage of profit before tax, that will be 100 less 20%, then we should be able to use 80% of the profit before tax. For letter C, 160 less 80, we should be able to get 80,000. Therefore, in terms of the break-even points in units, we can now get 1,000 units. In terms of the break-even points in amounts, that will be 80,000 divided by 40% less 20%, or 80,000 divided by 20%, you should be able to get 400,000 pesos. Let's answer letter D. Profit before tax is 25 pesos per unit. Let's plot it here, 25 pesos per unit. Then this profit before tax, this should be deducted to the unit contribution margin. Let's divide the 80,000 from the difference of 160 and 25 pesos, or 80,000 divided by 135. Then our break-even point in terms of units is 593 units. Letter E, the after-tax profit is 20% of sales. Let's write it here, 20% of sales. Again, the profit does not have the same basis with the sales. So we should be able to translate first the after-tax profit. And how should we do that? 20% divided by 60%, we should be able to get 33.33%. This percentage, or one-third, we will go into use that to deduct it from the contribution margin rate of 40%. For case E, 80,000 divided by 40% less 33%, we should be able to get 80,000 divided by 6.67%. And in terms of break-even point in units, we will going to get 1,200,000 pesos. Case F, pre-tax profit is 20% of cost. Case F, pre-tax profit is 20% of contribution margin rate. So let's write it here, 20% of CMR. Now, if we are working out with before tax profit, let's deduct the 20%. Then we will going to use the 80% as our denominator later. 80,000 divided by 40%. This 40% is our contribution margin rate. Then our understanding of it is that we will going to get only the 80% of it. So where did we get the 80%? That is the 100% before profit less 20%, which is our given. So we have 80,000 divided by 32%. Our answer for this one The break-even point in terms of units is 250,000 pesos. Let's try to solve case G. Post-tax profit is 20% of CMR. Just like what we did a while ago, 20%, we will going to divide it to 60%. We will going to get a one-third of it, or 33.33%. We will going to multiply the 40%, which is our contribution margin rate, to our derived percentage, 67%. And that will be 80,000 divided by 26.8%, or our break-even point in terms of units. Then, our break-even point in terms of amount is 298,507, or roughly 300,000 pesos. Just a recap, if you are working out with this type of example, you should be able to keep in mind if it's before tax or after tax. What is the correct tax rate? Is it provided, or you should going to use your silent assumption? And for the percentage, keep in mind that the base of the sales and the base of the profit before and after tax is different to each other. That's why we are translating it to have the same basis, or to have the same denominator. That's it for this video. Thank you all for watching.